I wonder how my stocks and cryptocurrencies are going today. Holy flippity flip flop flap and smokes everyone. Just when you thought things couldn't get any worse, it just has. We did not just see a bloodbath in the markets today, we saw an absolute massacre. And in today's video, I've got an urgent critical warning for all investors right now because unfortunately I see a lot of investors being led astray. So everyone, what exactly was behind this crash today? Will it get worse? When is the right time to buy? When is the real opportunities going to be coming? And what should we be doing right now to position ourselves for those opportunities? Well, everyone, that's exactly what we're going to get into in today's video. So let's not waste any time. Let's hit the charts. Well, holy smokes, everyone. Look at this. Wall Street staggers with a vicious 1.3 trillion stock rout. Look at this. Dow tumbles 1,000 points for its worst day in 2020, and the NASDAQ dropped 5% today. That is absolutely insane, everyone. A 1,000 drop in the Dow in a day and the NASDAQ dropping 5%. We're seeing high-grade blue chip stocks trading like penny stocks right now. Also, look at this. The S&P fell 3.5%. We check out here FTX trading platform. We can see here Bitcoin also did fall to a daily low of 35,500. And by the way, if you're looking for a safe, secure way to trade Bitcoin and other cryptocurrencies, you can use my link in the description for FTX. Instead of paying crazy high fees like some other platforms have a minimum fee of $2 to $3, FTX has no minimum fees. And instead of actually paying these high crazy fees, you can actually earn free cryptocurrency for every trade over $10. So again, use my code MICHAELCOWAN, link in the description and a pinned comment. And what's even more worrying today is we saw a sell-off in absolutely everything. We're seeing full on a liquidity crisis. There is no safe havens right now. Look at this, gold down 1.1% today to $1,873 an ounce. And silver got hit harder, which is normal. Normally when gold falls, silver falls a bit harder. Silver down 2.5% today. And we can see here on the 30-day, it is down 5.7%. But of course, the question we have to ask ourselves, what is causing this crash? And is the risks that are causing this crash, are they gone now? Is this the right time to buy the dip? Let's have a deeper look, everyone. Well, first things first, this, everyone. The US 10-year Treasury yield has finally surged over 3%. We can see here, as of recording this, it is 3.07%, and it actually did hit, I'll just bring up the chart here, adjust it here, it did hit 3.1% yesterday. Now remember what I've been warning about, people. I've been saying, look, if interest rates only go up to 2.5%, 3%, I'm not really worried here. I don't think we'll see a huge crash. We'll maybe just see a correction. But I have been warning, if the 10-year goes above 3.5% or 4%, then we're going to see this crash get much, much worse. And guess what this 10-year US Treasury yield is causing? It's causing mortgage rates to absolutely skyrocket, and we could see mortgage rates double what they were in 2020 this year in 2022. Remember, they hit a low of around 2.7% in 2020? Well, we will be seeing 5.5 and 6% mortgage rates soon. Now, going back to what caused the sell-off today, remember what I've been trying to warn people for the past few months now. I've been saying we are seeing a crash in the stock market, but it's only the small and mid-cap stocks that are crashing. So it's not bringing down the indexes. And I said when the market is really going to crash is when we'll see the large caps finally start to fall because they have the most weight in the NASDAQ, in the S&P 500, and in the Dow. And we are starting to see the big caps, the final safe havens in the stock market begin to fall, and it's going to bring the whole indexes down with it. And this is what will officially make us enter a bear market. So listen to this, everyone. Large tech stocks were under pressure with Facebook parent Meta Platforms and Amazon falling 6.8% and 7.6% respectively. Microsoft dropped 4.4%, Salesforce tumbled 7.1%, and Apple, the largest stock in the S&P 500 and the NASDAQ, closed down 5.6%. So it's these large caps falling that are really bringing down the indexes. But exactly why are they falling? Well, what happened yesterday, everyone? The Federal Reserve Chair, Jerome Powell, officially lifted interest rates 50 basis points. So now we have a federal funds rate at 0.75%. Now, what a lot of investors were worried about is if the Federal Reserve will do a 0.75% rate hike or announce they're going to do one the next meeting or the following meeting. Now, the Federal Reserve said, don't worry, we're not going to do that. There's no chance we're going to do that. Well, people, can you believe a word the Federal Reserve says? Remember when they said inflation was transitory? Remember when they said we're not even thinking about lifting interest rates? Remember when they said rates won't go up until 2023 or 2024? Remember when they said there will only be 2 or 3 interest rate hikes of 0.25% this year? Remember when they said there's no chance of a half percentage point rate hike? Well, do you think you can believe them when they say there's not going to be a 0.75% interest rate hike? No, people. Now, I'm not saying there's definitely going to be one, and even if they don't, if they keep on going with these 50 basis point rate hikes, we're still going to be in a lot of trouble. But stop listening to these central banks because they always have to talk up the economy. They always have to put a positive spin on everything because if they say anything negative, their words can literally crush the markets. So investors are very, very worried about what the Federal Reserve is going to do right now. But people, we have something else going on right now besides the Federal Reserve because remember, it's not just the Fed that makes stocks go up or down. There's also simple fundamentals like how strong is the economy and how much profit a company's making and how much revenue are they making. Well, like what we saw with the Dow falling 1,000 points today, we're starting to see companies that are linked to the economy, they're starting to fall as well. Look at this, stocks leveraged to economic growth also took a beating on Thursday. Caterpillar dropped nearly 3% and JP Morgan Chase shared 2.5%. Depot sank more than 5%. David Rubenstein said investors need to get back to reality about the headwinds for the markets and the economy, including the war in Ukraine and high inflation. And that's exactly right, everyone. We are in a recession right now. GDP fell 1.4% in the first quarter, and guess what? Even if we have a GDP increase of 0.1%, who cares about the numbers when you're seeing people really impacted, when they can't afford rent, when they can't afford food, when they can't afford gas? Guess what? It doesn't matter what the economic data tells you. For that person, it feels like a recession. And even if we do have growth this year of 1% with 8.5% inflation, in real terms, the economy is going backwards. And this is called stagflation, people. And what I think we're in right now is a stagflationary recession, and we're going to have a stagflationary crash like the 1970s. Because listen what else is happening, everyone. Worker output fell 7.5% in the first quarter, the biggest decline since 1974. At the same time, labor costs as measured against productivity soared 11.6%, bringing the increase over the past 4 quarters to 7.2%, the fastest rise in about 40 years, and weekly jobless claims actually increased to 200,000, well above Wall Street estimates. And maybe this could be due to people going back to the office. Maybe the commute is really demotivating. Maybe they're not getting as much sleep because they're having to wake up earlier, get home later. They're getting distracted by a lot of colleagues in the office. Maybe they don't like working with their boss. Who knows what's behind this decline? But we are seeing a drop in productivity. And unfortunately, the US economy, their productivity is falling and falling and falling. There's not much innovation happening. There's not much manufacturing happening. There's not much creating goods and services. There's just a lot of consumption. And that can't go on forever, people. Also, a record 4.5 million people quit their jobs in March as a great resignation continues. Workers are seeking more pay, better working conditions as bosses post a record 11.5 million openings. But you know what's interesting, people? I see there's record openings, but I also hear a lot of people tell me that they've applied for so many jobs and they're not getting any positions. So we are seeing a lot of companies with a lot of openings, but it's seeming like they're after the perfect candidate with 10 years experience for an entry-level job. So I know what you're thinking, okay, what does all this economic jargon mean for me in simple terms, and what should we do to protect our wealth, and when is the right time really to buy in these markets? Well, people, what this simply means is we're already in a bear market in the NASDAQ, in the Russell 2000. A lot of these tech stocks have crashed over 50%. This crash that I've been calling for months now, many people didn't think it was going to come, is officially here. A lot of people are thinking that the Federal Reserve is just going to lift interest rates to 2% and that's neutral and they can stop there. People, that is a complete lie. They're going to have to go above neutral. The Federal Reserve was going to lift interest rates to 2%. That's just part of normalizing monetary policy and bringing interest rates back to normal. Remember in 2018, they brought interest rates up to 2.25% just to normalize interest rates when there was not this crazy high inflation. If they're going to have to fight 8.5% inflation, normally what they would have to do is they'd have to bring interest rates to match it or above it. Now there's a lot more debt in the system. I don't think they'll have to go that far, but I do think at a minimum they're going to have to lift interest rates to 4%. And guess what that's going to cause? A lot of margin calls in the stock market. It's going to cause a housing crash. It's going to cause a huge wealth effect to the downside. A lot of people are going to feel less wealthier. They're not going to have money to invest. The cost of credit is going to skyrocket. And remember, the economy relies on credit. So credit card debt's going to get more expensive. Car loans, personal loans, and mortgage rates are going to skyrocket much higher. So for me, what I'm doing personally, this is not financial advice, just telling you what I'm going to be doing. I'm waiting for the S&P 500 to fall at least 20% and really 20 to 30% for me to start dollar cost averaging back into the markets. There's no way I'm going to be able to time the bottom, and literally nobody can time the bottom. So you need to find a range to dollar cost average, and at least you're not paying all-time highs like what people were doing in 2021. I've already got a big position in gold and silver, so I'm fine. I'm happy with that. But I do want to start adding to my positions in cryptocurrencies. But what I'm thinking, I am waiting for Bitcoin to fall below 30,000 because it did fall below 30,000 in May 2021. And the economic environment is much, much worse. So I'm going to be very patient. And I do think we will see Bitcoin sub 30,000. And I would not be surprised if we saw Bitcoin sub 25,000. So people, even though there's a lot of fear in the market right now, even though there's a lot of uncertainty, if you prepare now, like I've been warning about, food storage, paying off debt, have an emergency fund, you'll be fine. If you find ways to diversify your income, like starting a side hustle, hey, maybe even start your own YouTube channel, I have a lot of fun doing it, you will be okay. You start stashing cash right now for the crash, there is going to be huge opportunities, just like Warren Buffett's doing. He's not going out crazy buying right now. He's got hundreds and billions of dollars waiting on the sidelines to buy these opportunities that will be coming. So everyone, that was just my thoughts and opinions on what's happening in the markets today. What do you think? Let me know. Thanks for watching. I'll see you all in the next video.